Paul is Adcock Ingram. It's the number 2 player after Aspen in the local market. It's got all sorts of exciting over-the-counter type stuff like Myprodol and BioPlus, which people will be very familiar with. Interesting corporate track record though. It had a real slump in the last 5 years. It ended up being 34% held by Bidvest after a bit of a shareholder fight. But it is apparently now in turnaround mode. The market capitalization 10.5 billion rand. Price earnings ratio 14.22, dividend yield 1.94. Let's go to the share chart. Wayne, I mean, it looked terrible for a while, and it now looks a lot better.
Well, when you look at their results they come up with, these are spectacular results. And in there they state, listen, we've slimmed down in the Ghana business, we sold the Indian business, we got rid of those problems. They also state very specifically that all of the, what do you call it, the inherited problem childs here are now all sorted,
written
and
down,
gone,
shut down,
gone,
closed, finished.
gone.
So they can really focus on the stuff they have, which is good.
Yeah, and a good example is on their consumables, their consumer-related items, because a lot of it, turnover didn't even go up, yet profits were up 25, 26% because they just made it more efficient and cut costs and got the guys to do the basics right.
Like Carenza C or something, which is one of their brands, that's not going out of business. Well, you just got to make sure that the facility is operating at the right capacity utilization.
So, I mean, a spectacular turnaround, but once again, looking at the share chart, a lot's in the price already.
But now what's going to happen here? Because Bidvest took the stake and got quite excited, and people got quite excited that maybe they'd buy out the minorities, although it was an unusual deal for Bidvest, because why do you want to be in pharma? They haven't got anything else in that space. It seems to me they may as well sell that as well as, rather than it being a buyout.
I mean, Adcock's had a lot of problems when they were unbundled, but effectively the problem was they didn't have any distribution. They couldn't market and push their product out. Now, Bidvest is excellent at that, and maybe that was the reason behind the rationale.
The logistics
but, you know, once this thing is fixed up and the share price does a bit better, I wouldn't be surprised if they actually exit the business, because once you've got the synergies out of it, it's a highly competitive market, they say. I mean, it's a direct consumer market. It's not a services market, and Bidvest has always been a services company. You know, you don't see Bidvest products on the shelf in the supermarket. The shelf might be made by Bidvest, but you don't see a Bidvest consumer product on the shelf. So it's a little bit of a different business model.
But as far as Adcock is concerned, I mean, Andrew Hall, the CEO, has done a great job. I think you can buy them now. The only thing is, as you say, is it a little bit too expensive for you, or are you inclined just to say, come on, let's go?
I'm a bit cautious after such a massive price rise, to be honest. I'm a little bit cautious because it's a highly competitive business, this, and the trick here was to get it operating properly, not to double the sales volume, and that's happened.
Okay, so there's more hard work to be done, is what you're saying.
Now it actually becomes more difficult,
Okay, but I'm going to go hot anyway, because I think it could be an additional opportunity trade buyer maybe, but you're going to say not hot just for now.
I'll go not hot,